You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is real estate investment expert Sterling White. Now, Sterling got his start in real estate back in 2009 working on the construction side of commercial projects. He purchased his very first single-family home investment at the age of 23, and in a short time following this, he purchased another 100 or more single-family homes nationwide. Fast forward now to today, and Sterling has shifted his focus and now spends a majority of his time acquiring larger apartment deals. Now, to date, Sterling has over 200 properties in his portfolio. He also recently just closed on a 50-unit apartment complex a week and a half ago, and so we're going to dig deep into that one as well since it's so fresh. But I'm incredibly excited to dig deep into Sterling's story, his background, and how he got into this business. But before we do, I'd like to just briefly run through a couple of laundry list items with you guys. First and foremost, we're kind of post-recovery mode from Hurricane Irma. I'm sure if you guys don't live in Florida, you've seen it on the news. The last 2.5 to 3 weeks have just been all about Hurricane Irma and the wrath that she took to the Caribbean islands and also that brought to Florida as well. And so we're finally through that. And I only tell you this because a lot of you have heard me mention the apprenticeship program that we're going to be rolling out. It got a little bit delayed, and we hope to have it out here in the next week or two. Have more information about that in a coming up episode. But the reason that we're rolling out this apprenticeship program, and again, in case you haven't listened to any of the other shows, we are in acquisition mode at our company. Sunrise Capital Investors is our investment arm, and we're in growth mode. And we've got a big, hairy, audacious goal to basically add another 9,000 mobile home park lots to our existing portfolio that is currently just over 1,000 in the next 5 years. And so we're going to be needing help to do this. And we're really looking for those that have a passion for real estate. You don't have to have experience. We're just looking for someone that's hungry, that's driven, that's passionate, that really is ready to roll up their sleeves and get their elbows dirty a little bit and get their hands dirty and work next to a team that is successful, that has a track record. So if you have an interest in this apprenticeship program and learning more about it, stay tuned. Again, we'll have some more details coming out here in the following weeks. It was just delayed due to Hurricane Irma, and again, we'll have some details out here shortly. Next up, guys, my business partner, Charles Dehart, and myself. This is one of my partners in the mobile home park space. We are finishing up our book on mobile home park investing, and we've been working on it now for a few months. Actually a lot longer than that. It's actually been a few years, but we've really been putting the final touches over the last couple of months. And I'm telling you this because, as being loyal listeners that you are, I'm going to give you a copy absolutely free. What you need to do to get put on that VIP wait list so that you get a free copy as soon as it's released is text the word Kevin, just my name, Kevin, to 41411. Again, text Kevin to 41411. And as soon as that book is released, we will send you a free copy, okay? No strings attached whatsoever. You'll get a free copy before anyone else sees it. Lastly, guys, if you're an accredited investor and you're looking for a passive investment opportunity, then you need to check out the partnership opportunities that we have available at Sunrise Capital Investors. We are currently in capital raise mode. We've got 5 mobile home parks in contract. We just closed a few recently and are looking for a few additional partners to help us take down these couple of deals. So if you have an interest in looking at some incredible deals that have double-digit returns attached to them, you need to look us up. You can read more about us at our website, sunrisecapitalinvestors.com. You can even call us directly. It's toll-free 888-260-9455. And on our website, you can even download our investment prospectus. You can read more about our company. And review the entire investment portfolio that we currently have under ownership. Again, sunrisecapitalinvestors.com. And then, guys, one last thing here, actually, is if you're in the Tampa Bay area, that's where I'm based out of. I'm in Clearwater, Florida. I always put this out there to everyone because I love meeting others that have an interest and a passion for the real estate industry. And it doesn't even matter if you're actively investing today. If it's something that is of interest to you and you find yourself in the Tampa Bay area, again, whether it be for a vacation or business and you got some extra time, look me up. If I've got some time and our schedules can coordinate with one another, I'd love to meet you for a coffee, beer, whatever it might be. You can just shoot me an email directly. This is my personal email address. It's kevin@kevinbupp.com, and just let me know when you're coming, and we'll go ahead and try to coordinate a short meeting during your visit. So without further ado, I'd like to welcome our guest for this week's show, Sterling White. Sterling, you there, bud? How you doing?
Yes, I am. Hello, everyone, and get ready for us to bring the heat.
Yeah, we are going to bring the heat, man. It's actually hot as heck outside right now, so I'm already bringing the heat down here in Florida.
Awesome.
Yeah. So, Sterling, for those that don't know anything about you, that never heard your name before, take a few minutes and tell us a little bit more about yourself and your background, how you got into this business.
Yeah, so I started in my early elementary, middle school days, actually in the whole entrepreneurship realm. I was actually selling different Kool-Aid, CDs, anything that I can get my hands on to different kids across in the school. And kind of transitioning to where I got older, how I got into real estate is a good friend of mine was in construction, and I decided to get my hands dirty and learn more about the field, nitty gritty, and kind of taking a couple years from working in that, I met my mentor, who was the developer of large commercial apartment buildings downtown. Learned a lot from that individual, squeezed their 20 years of experience into about 3 to 4 years working behind them. And then at that point, that's when I transitioned full-time into the current organization.
Okay. And so you got your start by really getting your hands dirty, and which is not, I wouldn't say that's the common path that a lot of people take, but I think that there's probably a ton of value that you learned from actually being a part of the construction side of things. That's a part of the business that I see a lot of people, they struggle with, especially if they get into value add deals. If they never got good at, estimating project renovation costs and things of that nature, then it seems like them sticking in budgets is very challenging. That's a big challenging portion for them. So I'm sure with you, that previous experience was incredibly helpful with the business that you're in today, which is, you own a ton of single family homes as well as a lot of multifamily real estate. So I want to talk real quick about the very first deal you purchased, because that really is that's the foundation. That very first home you purchased, I believe you were 23 years old. You're still a young guy today. 23, you purchased your first single-family home investment. Tell us just briefly a little bit about that. And then what I'd like to do then is transition a little bit more into where you are today with multifamily properties.
Yeah, and that first deal that I purchased was with my mentor. And what I had, the value that I brought to that individual was my time. He had the capital, I had the time, so I went out and found the deal, presented it to him, and instead of taking a simple wholesale fee, I asked, hey, could I retain equity, because I'm looking more big picture and long term, and he said, yes, but you'll have to do this, this, and this, which included getting the contractors in place, managing the rehab. So I had to do that whole entire process, which I learned a lot in order to get the equity. So when we purchased the deal, I had no money whatsoever, and it's been a long-term play since then. Okay,
so he acted pretty much as like your hard money lender almost, or did he just put up all the money for the deal altogether?
Yeah, he just put up all the money for the deal altogether.
Okay, good deal. So I want to talk about the transition stage. This show is more so about commercial real estate and multifamily real estate, and so I don't want to spend. Although it was your business for a very long time, there's nothing wrong with it. So I'm not poo-pooing on single-family home investments at all. But that's not what this show is about. And so, but what I do want to talk about is the transitionary period from, owning 100 plus single family homes or purchasing 100 plus single family homes. I don't know if you were buying for, long-term cash flow and having rentals, or if you were fixing and flipping. I'm not sure what your exact business was, but what I do want to know is when did the light bulb go off that maybe I should look into these multifamily properties? Maybe there's a bigger picture out there that I want to dig into. Tell me about that point in time and, when that light bulb actually clicked off in your head.
Yeah. Okay. And so what my partner and I were firmly doing before our present company was we were buying and selling hundreds of turnkey properties to investors across the nation. And then on the back end, we were managing with that formal operations. But we had the infrastructure to manage all these various single families, but the longevity of that, and it's very time intensive and labor intensive to manage that many properties in a city. You have 300 that's on the north side of town, 40 on the other side of town. So we took a step back and really wanted to not only scale our model, but when it comes to instead of owning one, it's easier to manage and own 146 unit apartment building versus owning 46 single family homes in individual places. So It was a no-brainer to make the shift.
Yeah, you're preaching to the choir. I had a pretty large portfolio of single family homes myself way back in the day, back in the early to mid 2000s, and it was just incredibly inefficient. And I know that there's maybe some companies out there that could do it way better than I or maybe you as well. And they've found some efficiencies where we didn't. But at the end of the day, no one's going to argue the point that it is much easier to manage 5 100-unit apartment buildings and 500 single-family homes spread out across 1 or 2 different counties or 3 counties. Like our properties were spread out amongst 4 or 5 counties here in Florida, and it was very, very challenging and incredibly inefficient. So, no, I think that you're on the right path, my friend. So, talk to me about that first. I believe one of your first multifamily deals, one of the first larger multifamily deals, was a 46-unit property. Tell us a little bit about that.
Yeah, so that one was a deep value add play, in which it was a specific pocket in town where it was distressed, but everything surrounding it was very desirable, and it was experiencing a lot of gentrification. And we drove back there, saw the apartment needed some work, and that's when we pulled the public records, and you can do all this via Google, love Google, and we found the owner was the LLC was the owner, and then we digged a little bit more and actually found the owner of that LLC, called them, and then that's when we started the negotiations back and forth.
And how long did that take you from the first point of contact with that owner to the point where you actually had that deal closed up?
I would say it was a 5 to 7 month period. It took a lot longer than we expected from the time of acquisition to the due diligence to inspecting all the units to actually closing longer than we anticipated.
I've come to find, and Sterling, you and I had talked about this before we came on the show together here. We talked about our marketing methods and how we source deals. And, you're a very out-of-the-box thinker, as am I, regarding marketing strategies. We do a lot of direct mail campaigns. We do a lot of cold calling. And this deal, it wasn't listed. You basically found the owner's information and you cold called them. And what I have found is the majority of deals that we do are off-market. They're direct to owner like this as a result of a cold call or direct mail. But the deal cycle, or the closing cycle, the deal cycle, whatever you want to call it, from the first point of contact to when that thing actually closes is like 3 to 4 times longer than what it would be if it was actually a property that's already listed for sale.
Yes.
At least on our side it is. And for the most part, what I've come to find is that it's because the owners weren't really ready to sell. And so
exactly.
if they're mom and pop and they run their business like that, then their books probably aren't in all that great of order. And even if they are, they're still not all together. And it takes some time to gather everything that you're looking for. And they drag their feet and they take their time to do it. It's just, there's no one really prodding them. There's no broker prodding them, or there's no broker that had been working with them for many months to gather all this up. It's you. Mm-hmm. You are that guy. You're acting as that guy. So, but you know what? The benefit of going off market like this is that, especially in today's real estate climate, to where that 46 unit property, if that thing got listed for sale and it got put up on LoopNet and thrown out there to every buyer that's looking for multifamily, which there's a ton today,
Oh,
it
yeah.
would have had multiple offers, and you'd have been competing against others, and good chance that you wouldn't have been willing to pay what it sold for.
Yeah, highest and best.
Yeah.
We're accepting at 5 p.m. today.
So the trade-off of that long deal cycle is that you don't have competition for the most part. There has been some times where, the seller opened it up to maybe one other buyer and a little bit of a bidding war, but you still don't have 10 other buyers coming in that, might have different intentions or might not know as much of you as you and are willing to pay more, even though they shouldn't be, So, I'm okay with that long deal cycle if that means I can get really good deals and deal directly with the owner and not have competition throwing out higher offers. So let's talk a little bit about that. I want to dig into some of the particulars of this 46 unit as far as, was it you said it was kind of distressed. I want to learn what that really meant as far as this particular property is concerned. But I want to talk about your marketing strategy because this really has applied to a lot of your business. You've applied to a lot of your business where you drive certain markets or you drive your market, you drive certain neighborhoods, and you identify properties that look distressed. And you dig in deep. You go into public records. You go into Secretary of State website if it's owned in an LLC and find out who the owners are. And is that, for the most part, is that how you have found your best deals by going that route?
I would say yes. And additionally, another route that we take as well is, I'm just drop some nuggets, is we have put together more transparency on our operations. So who we are exactly, we put that out in a PDF, different documents, and we actually will mail that to the seller versus just a simple, we're interested in purchasing your house. Just a little something that'll put us above the competition, that puts a face behind, we're serious, this is our track record, and this is why we're interested in purchasing your asset.
So what does that PDF typically say? What kind of information do you put on that? So you'll put if it's a direct mail campaign, you'll write a letter basically stating your interest in their property, but then there's an accompanying a PDF document in there as well or is this something you email, or is this something that you print out and put in like the direct mail letter? Yeah,
this is actually a presentation, like a PowerPoint. And the first slide will be, this is Sterling White. I have this amount of properties that I've purchased here in Indianapolis. I am the founder of the company Holdfolio. And then the second slide will be a case study of will be a portfolio, which will include all of the properties that we have purchased. And then the third one will detail, this is, I should pull the PowerPoint, or maybe I can share.
Is this something to where, like in the direct mail letter, you got like a URL that they have to go to see this, or are these just like printed documents inside that mailer that you're sending out?
Yes, this is just printed documents.
Okay.
That we put in the mailer.
Okay, I understand. I was just trying to figure that out because the interesting thing is if you told me it was a URL, which would be fine, there's still a lot of people that, at least in our business, maybe not with you so much, in the apartment space, but I'm sure there's still a lot of older mom and pop operators that literally just don't use the internet and they don't go online, and you'd be missing those folks. And I would say that probably 60% of the people we purchase from, they know how to use it, but they don't do it on a regular basis. That's for sure. And they probably wouldn't go to the website if we gave them one. But I like that idea. I think that's I think that would be incredibly helpful, just to kind of set your credibility, set the tone for who you are and what separates you from all the other buyers out there. Because I guarantee that in this heated climate, that 46-unit property, maybe he didn't mention it to you, maybe he did, but there had to be other people that were pursuing that had sent him mailers, right? That had maybe cold called him. Do you think so?
Yeah, there was, and he mentioned it to us up front that if you guys aren't going to put down at least $50,000 earnest money, then don't even talk to me. Okay,
good deal. So you guys, that's a lot of earnest money on that size of a deal. But hey, it shows that you're serious. And as long as the contract's written correctly, then you shouldn't have any kind of fear of not getting that back if you don't go through with the deal. So let's talk about the value add component, or I guess you said it was a distressed property. So give us some particulars of it and define distress as it pertains to this particular property.
Yeah, so it had deferred maintenance. And the good thing is, and this is what caused the delay as well, is there were a couple of units that experienced fire damage, and that led up to the roofs, which those were being replaced at the time when we were acquiring it. So that was really what caused the delay in the closing, because it was during winter time and they were trying to replace the roofs. But there's the units were outdated. There was the paint throughout was all whitewashed. There was no two-tone paint schemes. The parking lot there was potholes significant throughout when you're driving, and the signage didn't pop at all. And just when you drove back there, it was pretty. It wasn't very presentable.
Okay.
Essentially.
Okay.
And on top of that, the rents were the rents were about $80 to $90 under fair market.
Okay. And how about the occupancy of the units? I mean, were most of them fully occupied?
It was about 55% occupied.
That's it. Wow.
Time.
Wow.
Yes.
Was it because of the fire damage units that the others weren't occupied?
It was that once that happened, a lot of the tenants did move out, and the seller was at a point in time where he was just done with the property, and he was actually selling off all of his other assets as well, and just was hanging on to this one. So we came at the right time.
Yeah. Timing's everything. I mean, and that's why it's so incredibly important to, if you'd have talked to him 2 years ago, maybe the timing wasn't right, but if you'd have stayed in front of him, that would have been the important part of that process, is staying in front of him. Even if he said he was not going to sell, things change. Things change in people's lives. That fire, he didn't expect the fire to happen, so that could have been the tipping point for him.
The follow-up is key. That is for sure.
Yep. So let's talk about the renovations process. It sounds like a pretty capital-intensive property. So you've got a lot of capital improvements, things such as road repair. You got signage. You've got units that need renovated, basically because they're either outdated and or they've got fire damage. So give us what you purchased for the property, how much money you put into renovations, and then kind of where you're at today as far as how much value you've added.
Yeah, and those are some great points. And the total purchase price on the property was $900,000, in which this is a good thing as well, is the seller carried back $700,000 of that, and we only had to put down $200,000 to acquire the deal.
Oh, that's great.
And this was what really helped us to get that structure is not only did the seller want to sell and was motivated, but at the same time, we met with them face to face. I brought a thank you card when I showed up with them, and then we just sat down and got through all the details. But to get back to the point of the total, so we purchased it for $900,000, and the improvements. The total cost is a little under $400,000, and that included, as you mentioned, the exterior, which was we painted the balconies, replaced the what do you call it? The shutters. We did a complete parking lot seal.
Mm-hmm.
We replaced the signage. We did rebranding. It was formerly called Southview Apartments, and we changed it to Garfield Place. And those that was it in terms of what we did. We did a lot of we did a complete overhaul on the property.
Okay. And how did you fund those the capital improvements, the $400,000, since he was carrying it? So it wasn't any kind of specialty loan program that had where you could roll in renovation costs or anything like that. So how did you guys fund those?
We raised it from our investor base.
Okay, got it. So you had to raise the additional capital. And so where are you guys? When did you purchase this? How long ago how long has it been?
We purchased it at the end of February, beginning of March.
Okay, so this year. So not that long. How long did it take you to turn it around, and where are you guys at today with it? Is your occupancy up? I mean, is it 85, 90% or more, or are you still working on the turnaround process?
We're still working on the turnaround process, but at this present time, we were able to get our aggressive rents that we were actually shooting for, which the market was susceptible to actually paying that, which was a great thing because we created enough value. And right now we're about 80% completed with the total project. and we've got the occupancy up to about 65%. And now we have a waiting list for the remaining units that we have to renovate and get up to rent ready.
Okay. And are you guys managing this yourself through your own management company, or do you have a third-party management company handling it?
We are managing it all in-house.
Okay. Okay, got it. Well, I mean, you guys had experience with the management side, and so it sounds like you already had the infrastructure in place, which a lot of people don't, which I could see why it doesn't make sense for people to manage it in-house, but it sounds like you guys already had that there. Okay, so good deal. So that's exciting. What do you think once you reach full stabilization, which let's say once you reach, I don't know what it is in that market, maybe 88% or 93% occupancy, but whenever you reach whatever that number is to be considered stabilized, what do you think a conservative valuation will be on the property?
Around 1.8 based upon a 8% cap rate.
Okay, so you basically added $500,000 of value when it's all said and done. That's not too shabby.
Correct. Mm-hmm.
Not too shabby. And so are you guys looking, as soon as you get stabilized, are you looking to do like a cash out refi and get some of your investor capital back, or are the owner finance terms pretty attractive that the owner's given you?
The owner finance terms are not very lucrative. Okay. So we are definitely pushing to get the property stabilized and get agency debt. So okay. Refi.
Yep. So that would be perfect for like a small loan balance program through Fannie Mae, I bet.
Mm-hmm. Correct.
Okay. Sounds good. So, and then recently you just purchased a 50 unit, literally a week and a half ago. So That's exciting. Congratulations, first off.
Well, thank you.
And that one, I think we were talking about as well before the call, that one you also found by driving the market, right? Or correct me if I'm wrong, but doing a cold call, like researching who the owner was, Secretary of State, getting their phone number and calling them. Is that how you also found that deal?
Yes, and that was a individual who we nicknamed Imani, and he we brought him on full time to chase down multifamily deals.
Really? So you purchased the property from him, and then now he's working for you?
Yes, and yes, exactly, yes.
Okay. Had he owned that property for a long time, or?
Oh, no. He found the deal. Oh,
he found the deal. Okay,
yes,
so he found it. So he is somewhat of a bird dog, and he found that deal. Now he's out there pounding the pavement to find more.
That is correct, yes.
Do you mind me asking, because it's all across the board, and I know how we handle it typically. It's a lot of times it's on a case-by-case basis, but and you don't have to answer this if you don't want to, because I don't know if it's too personal or not, but as far as like a bird dog fee, I mean, whenever someone brings you a deal like that, what do you typically pay, or what kind of compensation do you offer for something like that? Like, let's talk about the 50 unit. Yeah,
and that one, we paid him about 1.5% of the purchase price, and we're still raising money for that property as well. So we haven't solidified a compensation, but it's going to be between 1.5 and 2%.
Okay. And what was the actual purchase price of that property?
That was $1.4 million.
Okay. Got it. And that one's also in Indianapolis?
Yes. Well, it's in Beech Grove, Indiana, which is its own little city, just right out, which is in Indianapolis.
Okay.
So it's about 7 minutes away from the other property that we just talked about. And this one is 90% occupied. So it's not as labor intensive as the other one.
Sure. Yeah, you can only do so many of those those major turnarounds at one time.
Oh yeah.
Ask me how I know. Yeah. So I want to ask you this, Sterling. I think we've already discussed some of it already, as far as like what sets you apart from maybe some of your competition, what makes you guys unique. And I think one of the big things that I've identified is your marketing strategies. And I think that most people that are listening to us right now, they would be baffled when I say that a lot of people know that direct mail. They hear people say, like, they hear you and I talk about that it works. They hear you and I talk about how cold calling works, but yet most of them just don't ever do it. They literally sit around and wait for a broker to bring them a deal. And so do you think that that's one of the big, I mean, you're a great guy. You obviously know your business really well, and you're good at what you do. You're obviously really good face-to-face with owners. But do you think, as far as sourcing deals, is that what really sets you guys apart? Because you're literally willing to go above and beyond what most other investors are willing to do?
That's what it is. And that is one thing that's in the book, Think and Grow Rich, is learn the habit of going the extra mile, especially in how tight it is in the market as of now. Is you just have to be willing to go above and beyond in order to source deals and get inventory.
Mm-hmm. So how many deals are you guys looking at on a regular basis? I mean, do you consistently send out like direct mail campaigns and make cold calls to the same owners over and over again? And if so, I mean, does your pipeline stay full, or are you just kind of taking down like a 50 space property here, a 50 door property there? I mean, or are you trying to fill the pipeline in a big way?
We are filling the pipeline in a big way. And we were recently under contract on a 118 unit that was in Cincinnati, Ohio. Mm-hmm. So we're looking at different markets such as Louisville. There is Cincinnati, Ohio, as I mentioned, Columbus, Ohio. All these different markets that are in about a 3-hour drive from our headquarters, Indianapolis, that have those larger MSAs.
Yep. Okay.
So larger population.
You just mentioned something. I want to talk about it. Most of the time we always talk about all the positives of this business and buying property and making money and, creating $500,000 or $1 million or more of forced equity by raising rents or doing a repositioning like you're doing in that 46 unit property. But you just mentioned a 118 unit property. I think you said Cincinnati, that you were in contract with, but you obviously are no longer in contract with.
Correct.
What happened? Because this happens all the time. I mean, deals fall apart for many different reasons, even though, in fact, the ones that you think are like slam dunks on the front end are the ones that like end up having the skeletons in the closet. And the ones that you weren't overly excited about in the beginning tend to be the ones that you're like, God, how did I miss that? That's wow. You find all these little secrets. You're like, whoa, that thing's way more exciting than I thought it was when I first found it. So tell me about that 118 unit and why it fell apart.
I'd say our biggest learning lesson from this, and I love learning lessons, which people say are failures, but it's only learning to me, in my point of view. But with this is when we were initially walking through the property with the seller, and this was prior to going under contract, is he mentioned there was multiple leaks that were throughout the property, and he's been repairing the roofs he owned it 18 years. So he's been repairing the roofs over that whole time frame. And once we got under contract, we sent our money to the agency to come out, do their inspection, and that was our lender, and that was about $10,000 to $15,000 expense wise. And as soon as the day when everyone came out, we walked all of the units. We had roofers go up there and inspect all of the roofs, and it turns out that they said that all of these need to be replaced. There's no repairing whatsoever. And that completely just blew through our budget.
Okay.
So with that being said, if you hear those types of things from a seller, make sure you have your contacts in line and have them go up there, if you can, before spending all that time to do your due diligence and spend all that money to your lender to come out and inspect the property.
So your lender sent their engineers out, their engineer team out as well, and so like you had some expense there that you could have saved if you would have had your own, roofing crew go out there initially before the lender sent their people out there. Is that what you're getting at?
Exactly.
Okay.
Exactly.
So new roofs on that size of a property. I don't know how many buildings it is, but
10 buildings.
10 buildings. Okay, so probably like $120,000 or so, $150,000.
$400,000.
Why so much?
It came out to those.
What kind of roofs are they?
They needed to be replaced.
Wow. Okay.
And I don't exactly know the type of material that the roofers use on that. I'd have to further educate myself.
Sure.
And the seller was not flexible at all in providing a credit. And if we just knew that up front, then we wouldn't have gone through that whole process.
Okay, so no flexibility whatsoever from that seller. And do you know if I'm assuming in this type of market, there's probably someone that came right behind you and probably put it under contract for what you had under contract for, and we'll probably be okay as long as they don't have to get financing, conventional financing. They'll be okay with buying it, even if it's got roof. I feel like there's so many buyers out there that just are willing they're willing to buy anything just to buy it, just because I don't know why, because they think it's just if you buy real estate, you become rich no matter what it is. And that sounds like a big, not a dud, but one that's some major skeletons that.
Exactly,
$400,000 on a 118 unit property.
Just the roofs.
Yeah, that's gonna affect your cash flow and your returns a little bit. A little bit.
We were under contract for 4.7, and right after the deal fell through, he went to another buyer, which I believe his broker is actually going to put it online, but they have from my understanding, under contract for $5 million at this present time. So yeah, as you mentioned, someone out there. We knew someone would be willing to pay more. Yeah,
and that's okay. There's absolutely nothing wrong with that. I think it's kind of like the advice that you hear before you go to an auction. It's like before you go in, and it could be any kind of auction, not even just a real estate auction, but any kind of auction. Know what you're willing to pay. Know what your cap is before you go in there and start raising your hand and throwing in offers or throwing in bids. Because the excitement and, the adrenaline starts flowing, and before you know it, like you're paying 30% more than what you really should. I mean, based on what the factual data supports. And I think that's very important it's very important to keep in place when you're looking at properties and when you're looking at investments. I mean, your numbers, if you're good at underwriting, I mean, if you feel very comfortable with your underwriting skills, and when you look at a property and you basically underwrite it and you feel comfortable that, in the projected returns and the projected cash flows, estimated repairs, and especially if you have investors involved, it's one thing with your money, your own money, but if it's someone else's money and you're being foolish with it by overpaying for something, shame on you. I mean, so just stick to your guns, know what you're willing to pay, know what your cap is, and be okay with it. Get past it. There's always another deal out there. I mean, there's always another deal, especially if you're putting the effort in, and just like you are, just like we do on a regular basis. We put feelers out there all the time. We are always sending mailers. We are always making cold calls. And the momentum that builds from that is incredible. And so things that we have started prospecting 3 years ago, they pop out of the woodwork, And so it's just all about keeping that pipeline full. And so when something does fall apart, you're not heartbroken over it. You just move on and know that another one's going to come behind it. So
exactly. And you touched on a valid point too, as well, Kevin, is when you're calculating your numbers, just stick with those calculations. And in the event that, let's say, those roof expense did come up, don't try and manipulate your numbers to make it work at that purchase price.
Right. Yep. Absolutely.
That's huge.
And what I found in deals like this, and, again, we're in a silly marketplace right now in a lot of areas, especially with multifamily. So it probably someone will probably pay equal or even higher than what you had under contract for. But it's also very common that this thing might come back to you.
Exactly.
You never know. I mean, if enough people back out of this deal and this guy's not flexible, the broker might get fed up with him. And then the guy might call you back and say, hey, you guys still interested? Still available a year later, And
then that's when we counter at 4.3.
Yep, still interested, but you know what? Still have an issue about those leaky roofs that I'm sure are even worse now today than what they were a year ago.
Yes, exactly.
So you've been at this now 8 years, Sterling. If you could go back to year one, back in 2009, and knowing what you know today, if you could give yourself some advice, what would that advice be?
I would say two things is one, go big. And the second is, Sterling, it's completely fine that you're veering and going into the unknown. It will all work itself out if you just put in the work and stay persistent.
Mm-hmm. No, that's so true. And everything's the unknown until you do it once.
Exactly. Yes.
Yeah. I mean, you rode a bike, you probably fell, and then it's fine, right? You don't even think about it. Everything you do, it was the unknown until you actually did it one time. So, in this business, there's always, every day is a learning day. I don't care if you've been in the business for for 40, 50, 60 years. I mean, I've been a real estate investor full time since I was 19 years old, and I'm 38 today. And even now, there's always something new, always a new challenge. But I think that's one of the exciting parts of this business. At least that's one of the parts that I really get excited about. I love learning, and I love meeting challenges and overcoming the challenges. And because, you know, in this business, I always like to say, if you can become a top-notch problem solver, and whatever that means and how that applies to whatever type of real estate you're investing in, but if you can become a very top-notch problem solver, you're going to get incredibly wealthy in this business. And so challenges to me are just problems, and I need to find a solution for them.
There you go. Reverse engineer to get to that solution.
That's it. So, Sterling, you've given us a ton of gold nuggets already here throughout the show today, but if you just had one final golden nugget of advice or wisdom that you'd like to leave with our listeners today that may inspire and motivate them as they progress in their real estate investing career, what would that one last golden nugget be?
Never stop learning.
Yep. I love it. How about, what's your favorite book? Like, I know that you probably got a whole bookshelf like I do, or a whole wall of books, but if you had to pick like one book that had the biggest impact on your life and your overall success, what would that one book be?
That's really hard to pinpoint since I've read so many, but one that I've just read recently is called 11 Rings, that was wrote by Phil Jackson, which was the NBA coach that won 11 rings with the Lakers and the Chicago Bulls when they had Jordan, Lakers when they had Kobe and Shaq. And it really gives you behind the scenes of not only how he built these teams to achieve those high levels of success, but managing all those different personalities as well.
Interesting.
The game of basketball essentially can be translated to business, because you have teams within your business that are building something ultimately towards a larger goal. So that's
great. I'll add that to my list. Fantastic. Well, Sterling, it's been an absolute pleasure, man. Thank you so much for coming on the show today. And for those that are out there that want to learn more about Sterling and read a little more about his company, you can visit him at holdfolio.com. And Sterling, tell me if I get this correct. It's HOLDFOLIO, holdfolio.com. Is that correct?
That is perfect.
All right. Well, Sterling, that's all we have today, my friend. Again, I really appreciate you coming to the show, and I wish you just incredible success as you move throughout your real estate career here. You got so many more years ahead of you, and you guys are kicking butt, so keep it up, my friend.
All right. Dream big, take action, everyone.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.